Okay, it's 4 p.m., April 26th. And we're here for the budget workshop meeting. Can we have a roll call from the city clerk, please?
Okay. Mayor Rostick,
Here.
Vice Mayor Kerr,
Here.
Commissioner Taglerini,
Here.
Commissioner McGeehan,
Here.
and Commissioner Brooks. Here. All are present.
Great. Is there any public comment at this time for anything that's not covered in the agenda? I'll take that as a no. Okay, next is discussion items, budget workshop materials.
Thank you, Mr. Mayor and City Commission and city staff that's here. I'm Robin Gomez, Madera Beach City Manager. We'll provide to you and looking for your, obviously, commission input and public input on this. Is our first workshop discussion for our fiscal year 2024 or 2023-2024. So October 1 of 2023 through September 30th of 2024. And what we would be looking at, what information we will be presenting. And really this is to get, again, mostly commission input, feedback, what you would like to see, what you would like for staff to review between this workshop. We will essentially, the schedule will go that we will have a workshop every month up until September, when we have 2 public hearings to adopt the final version of the fiscal 2024 budget. In July, the next one will be on May the 24th. And then essentially the 4th Wednesday of every month going throughout all the way through September, as I stated. At a meeting in July, and we will determine that exact date, we will bring to you a proposed millage rate based on the discussions at this workshop and the next workshop. And we'll explain what statutory under Florida statutes we're required to do, what the commission, what action you are required to take. And we will proceed from that point on all the way through the 2 formal public hearings that are held in September. So really no significant change in the scheduling from last year, which was my first year producing a budget with city staff and the commission, and probably not significantly different than in prior years as well. So you have before we go through the data that's in the packet, and we will present you a little bit of the historical of our general fund revenues, our millage rates, and really kind of focus on those primarily. And then really the only additional detailed item provided that's in the packet really for discussion is what to incorporate specifically for benefits that are provided to employees, but specifically whether we consider adding to next year's budget any city funding for dependent medical and dental coverage. But we'll get to that kind of toward the end of the presentation. The pension, I had mentioned about discussing the pension due to data that we don't have currently. We will bring that back at the June workshop and determine what we would propose, and your feedback for any changes that you decide to make. For right now, we only our fire employees, and I believe we have 2 regular city employees that are in a pension system, which is the Florida retirement system. Then all other employees are all in a 401 type K plan. But we will bring that back to you at the next. We will provide you some information in a few weeks, and then have that discussion at the next workshop. How we produce the budget is clearly we have to, by Florida statutes, produce a balanced budget. Our revenue that we are expected to receive it must equal what we are looking to spend, unlike the federal government, but we have to have a balanced budget. And again, the commission approves the budgets, approved by resolution, not an ordinance, if I recall that correctly.
I believe here it's an ordinance.
Oh, it is an I'm sorry, it's an ordinance.
Most municipalities are resolution, but there are some.
So by ordinance, again, that'll be in September after having those 2 public hearings and all of these discussions. But As we heard at the last workshop, the city's financial position and our revenues and expenditures have been essentially doing quite well, and evidenced by some of the reserves that we have, particularly in the general fund and some of the other city funds. So how we're looking is looking at every year, and next year being really no significant difference, is to make sure that what we're looking to spend will not exceed the revenue that we're expected to receive. But again, the revenue will be our largest single source of revenue in the general fund is the ad valorem tax, or the property tax. And that is determined by two components. Obviously, the rate that the commission adopts, the millage rate that you approved to levy, and then the valuation that the Pinellas County property appraiser provides on all property, real and personal property within our corporate limits. So whatever that is determined, that is primarily beyond our control, the valuations on a parcel. What we can control is the tax levy. Whether we choose, whether the commission adopts the same millage rate as in the prior year, or a higher rate or a lower rate, or, and we will explain in detail at a future workshop, the rollback rate, which is essentially the tax rate that is based on the value of all property for next year that the appraiser identifies in this year. What the tax rate based on that value, what the tax rate would need to be so that next year we collect the same amount of revenue as in the current year. So, and usually that number, as long as property values increase, that rollback millage rate is usually lower than your actual millage rate. But again, depending on, based on if your values increase from one year to another. And of course, the economic conditions that we have been experiencing, property values have been increasing, and they have been increasing close to double digits and exceeding double digits. We are also, the economic conditions have been, for real property in particular, folks have been selling, properties have been selling and some are being purchased by investors. When that happens is a property moves from being homesteaded, which means you have a smaller rate of growth in your tax from one year to the next. For a homesteaded property, when it moves into a non-homesteaded, then it gets readjusted for value, and that value is closer to the sale price of the property, which means that it typically means that it generates more property taxes. So some things to consider going forward. Obviously, this has not always been the case, but certainly in coastal communities and in Pinellas County, we have been fortunate that property values have increased. And whether that's expected to continue, I think is a matter of opinion, but early economic forecasts into 2024 and into 2025 are indicating that property values will sort of even out, but will still be positive rather than negative. We're not expecting or forecasted to see a decline in property values. What we may see in the next, particularly in 2024, more than in the current year or last year, are condos possibly, selling more than before. And again, once they do sell, they are then readjusted by the property appraiser. And if they move from homesteaded to non-homesteaded, then the value is even higher, then the taxes are even higher because the value has increased. Proper condos in particular are going to be selling, that's the forecast, due to insurance, mainly the cost of insuring on the coast. And so that's a big issue. We've heard that already I've heard it from dozens of residents and even others that are just investors as to whether they can continue to afford the increases in insurance. And the legislative changes requiring the inspections of condos and structures that are 3 stories and higher are further causing a lot of condo owners to consider whether to sell or to turn their property over more to an investment. So just to give you an overview of what may be happening.
Can I ask a question? If a house, if a property, condo or house, turns over from homestead to non-homesteaded, does it automatically become a commercial property, or is it just a valued property until they get like a business license?
Whether it has a business license to the property appraiser is not a determinant of the value. It's simply once it loses its homesteaded, once it changes, even if it changes ownership, the value is readjusted. Now, Florida does have a cap. If you do buy a property, you owned a property and then buy another one, then your homestead sort of transfers. So you're not hit with a giant increase. So if you pay $300,000 more for a property, for another property than the one you were living in, you're not really hit with the higher value. But if it's just, once they are sold, if it's somebody who did not live in the area, did not have a homestead, then it gets readjusted. And if it goes into a non-homesteaded, it's still listed as residential because people are still living in it. But for tax purposes, for valuation and tax purposes, it's almost being treated as a commercial property. And then but it may not be identified. That's sort of the, last year when we discussed this, we had the data of the total number of parcels in the city and those that were residential and commercial, industrial, et cetera. And I explained that can be somewhat misleading because not every residential parcel is being valued as residential. It's not, when it's no longer homesteaded, it's now become an investment property essentially, then it's more of commercial. You do have to have a business tax to rent it, but it's still listed by the property appraiser as a residential parcel.
I got you. So it's not automatically considered commercial
No.
property unless they apply for a business license.
And if they do, which again, cities issue those, the property appraiser, whether it has a business tax or not, they're simply looking at the value and a change in ownership.
Gotcha. Thank you.
Because it's still listed as, because it's still the use in terms of, it's still a residence for
The use is
people.
not relevant.
Yeah, whether, to a certain extent, because whether somebody lives there year round or you have 200 people who are staying there an average of 1 day to a week, it's still, people are living in it, even though it has become, for all intents and purposes, a business.
Thank you.
But we'll explain, we will have a preliminary valuation next month. Essentially the tax roll, and that for every taxing authority receives that, I think in the middle of May or in the middle of May. And so at the next workshop, we will have much more definitive data as to what we believe the valuations will be, which kind of makes it a little easier for what you would like the millage rate to be if there's any proposed changes. But certainly it's never early enough to have the discussion as to what any elected official or any commissioner or council would like to see in their budget for the next year.
Okay, I have a question then. So with the numbers you're going to bring forward, that is now going to include the properties that went from under construction to having a CO, and then they're going to be on the full tax rolls?
It depends when the CO was issued.
What's the cutoff date on
I
that?
believe, and Frank, January 1st. So if COs were issued up until January 1 of 2023, then they will be in the valuation that we will receive next month. So if you have a very large commercial property that the construction concluded, we issued the CO in October of 2022, then it will show up in the 2023 tax roll that we will receive.
Any idea how many properties are involved with that now? Just
Well,
a ballpark.
we've issued, I think, more residential than commercial. We issued one, Frank, can you correct me, 1 or 2 commercial this year, COs, two large commercial. And one is at least the condo out here on 150th. And Azul, they received theirs? No. So, no, whether they received their certificate of occupancy, just a condo. And then we've had, I mean, we can get the data, how many single family homes. But again, the single family homes that have been demolished and then a new house is built, there have been several this past year. The question is, when did they receive their CO? Yeah, so each, and that, you know, if you have 5, not so much, not a gigantic difference, but if we had 20, then it could be a considerable difference compared to the prior year, where, you know, some of them are still valued at a few $100,000, but when you tear down and build, even if it's $1 million home, again, the value is significantly higher than the prior year. So we're pretty certain it's one fairly large commercial and probably a dozen or so single family homes.
So January 1st is the cutoff.
January 1st. Okay. Any other questions? Or just to give you kind of a before overview. So as we go in through just want to go through, you have in front in your packet, but up on the screen as well, the general fund. This is a 4-year comparison of the general fund revenues and essentially by each line item. And you can see clearly from over the last 4 years, a significant increase in, again, the ad valorem tax. That's the first line. And what we do not know is what the legislature may or may not do in terms, there was a bill proposed to lower, one thing I didn't omitted is if your property is homesteaded, of course, you must own and reside in your home. You are capped at a maximum of 3% increase from 1 year to the next in the property taxes that you will pay. So even if a taxing authority increases your millage rate by doubles it or 1, 2, or however many mills, you are still capped at a 3% unless the rate of inflation is actually below 3%, which has happened, but I don't think that's the case going forward. Then you're capped at that amount. Non-homesteaded properties are capped at 10%. Yes.
Is that cap, is that based on the market value or the taxable value?
It's the
or is it-
taxable value.
But it's
yeah.
not the actual.
Yeah, not the just
It's-
market or just value.
But it's not the amount that you pay.
Correct.
It's the market value. I have one other comment, if I can, real quick, and this is really to Andrew. When we see this the next time, is it possible for the 2022 and the 2023 to have a year-to-date comparison? Because this really doesn't give us a whole lot to compare where we are year-to-date with our run rate, basically, from year to year. I mean, we can see what the budget is compared to the 2022 budget. But if this was run at the end of March, how would those numbers compare to the actual numbers in 2023? How would those compare to the actual numbers of 2022 at that same date?
Sure, we can do that. We even have automated reporting that does that, but the 2022 calculation would be taking that full annual figure and calculating based on the number of days outstanding.
The software wouldn't do that? You can't plug in a custom range?
We can pull those transactions manually and then sum them and provide that.
I don't want to create a lot of labor, but there's no action, there's no way for me to compare how we're doing this year versus last year on an actual basis and see what numbers are really jumping out.
Yeah, we can pick like through a month and say, okay, show me FY 2022 through March, and then it can filter the transactions just from October to March. So we can work on that reporting for you.
Thank you.
But really, again, the spreadsheet really just showing again, back to 2020, the budgeted and the actual or revised budget to the actual. And again, showing that our budget is sort of decreased in 1 year, then increased to the current, the 14.7 million. But again, just to show that, again, our largest revenue source comes from the ad valorem property taxes, followed by as you can see, other user fees and other taxes that are listed. So just to show you where we have been and realistically what we might see into the future, but in reality, it's really just showing you the data over the last few years. As you go about halfway down the page, you get into some of the other taxes, franchise fees. You can see impact fees underneath franchise fees, which were new last year. Continuing down other, just a variety of different taxes that we receive, including like public service taxes, communications taxes, and other shared revenues that come from the state that we receive a portion of. The reason for the increase this year, I think the $2 million are grants that we received for I think it's for the road work and the dredging of Johns Pass. On the following slide, the next page, just to give you an overview of our expenditures, the budget to actual within both, for the general fund, again, over the 4 years. And again, showing a little bit of a decline, a little bit of a growth for the increase for the current year. And again, just some of our projects that we're including in public works are really the majority of the increase in the expenditures for the current year. If the monies are not expended this year, we do not finish the projects, particularly the dredging, the groins, and that a lot of that is in the general fund, then it would carry over to the following year. Any questions on that? Next slide is really to get sort of the commission's more feedback on millage rates. The next slide provides, again, some of the cities that are comparable cities, as well as a historical of our millage rate and the property tax revenue back to 2017. And again, we're not the highest in the millage rate with the only city that's not listed on here that is comparable is Gulfport. But I think their millage rate is much higher than ours. It's over 4. But you can see where we're again below. Well, we're not certainly comparable to Clearwater, other than realistically just as being one of the larger cities in the county, but they are on the coast. But we're at our 2.75 mills, and we'll show a little bit here in another slide. For last year represented just over 16% of the total property tax bill. So a total property tax bill, which is on this slide, and I know it's kind of small to see up on the big screen, but we are at 2.75. That again represented a little over 16% of the total millage rate, which is 17.1166. Again, we are not the only taxing authority. The county levies taxes for general county operations. The school district or for public schools, there are 2 components. There's a state rate and then a local rate that they are allowed to levy. And then you have other smaller, the rest of the taxing authorities, from the Pinellas Suncoast Transit Authority, PSTA, to the the Pinellas County Planning Council, Juvenile Welfare Board, Southwest Florida Water Management District. Again, those are identified at the bottom of that slide. But you can see the interesting thing is, as residents, we have residents, I pay $10,000 in property taxes. Yeah, that's a considerable amount to pay in property taxes. But again, the property has a high value. But just keep in mind that 16% of that does come to the city. That's what you're paying for, all of the services that you are receiving, the general fund services, the administration, fire, policing, public works, and most of the recreation, parks maintenance, et cetera. That's what the property taxes pay for. But again, out of the total property tax, a little over 16%. Largest portion goes to the school system, followed by the county, which with the county includes the EMS services that are contracted countywide by Pinellas County.
Gomez?
Yes, go ahead.
Just out of curiosity, since they're right next door, why don't we include the Reddingtons in in our millage rate comparisons? Is it because
I think because they're so small
so small or they don't provide?
and
these
they don't provide
services?
the same, nearly
Right.
the same.
Just curious.
Can I jump in for a
Yeah,
second?
go ahead.
I provided a document. I did a little bit of research this morning, and of course, I made a mistake in my haste. But there's a resolution 2019-01 that the city clerk did some research for me, and I thank her for that. But there's two sections in that resolution, and the one I'd like to bring your attention to is let's see, it would be paragraph 1, 2, about the 5th paragraph down, where there's 5 cities referred to as peer cities that we can evaluate ourselves against. And then there's 9 agencies that are considered market competitors, but I didn't do anything with that. So with the peer cities, if you go to the spreadsheet, I forgot to highlight South Pasadena, but those are considered our peer cities for comparison. And I think that falls in line with, other than the city of Gulfport having so many people, that the rest of the peer cities are pretty close to the same population as us. Obviously, Clearwater's out of the park with over 100,000. And then the city of Dunedin on the report with 35,000 that's a little out of the ballpark too. But I had to call South Pasadena and I talked to their financial person because the number there, and from what I was seeing online, because I was trying to verify the numbers, appeared to be incorrect. That 4.96 is supposed to be for 2023, not 2022, and that number is 4.24. Not a big issue, but I wanted to bring forward that we have peer cities that we can compare ourselves to, and that's what that document that everybody's got a copy of for everyone's review.
The South Pasadena and where these up on the screen, where these came from are both that our auditors compiled and reviewed, but they come from what's on file with the county. That's what they reported. So South Pasadena is listed at 4.965. If they made that into an error, we can confirm with them, but that's what the county lists. So this is for everyone that the county does list they have a long spreadsheet of every taxing authority in the county and then what their millage rate is. And that includes the fire districts, and library districts that in certain parts of the county, particularly in the unincorporated parts, you're not contributing to any city. Your government is the county, and then your fire service might be its own district, such as East Lake, such as Pinellas Suncoast Fire, Palm Harbor, because those are not cities. Their fire departments are special districts as created by the legislature. So, but we can incorporate any data from those, but the Reddingtons have always been sort of very small, but we can certainly include them. I mean, their millage rates are, I think Reddington Beach is 1. Reddington Shores might be, I think, just under 2. Well, actually, I can.
Yeah, they're
Tell
not
you-
comparable to
It's all right.
us.
I was just curious since they're neighbors, that's all.
Yeah, Reddington Beach is 1.8149. Reddington Shores 1.6896, and North Reddington Beach is 1. So a little bit less. They're the least of the lowest in the county, North Reddington Beach at 1 for millage rate. And again, this is the sheet up on the screen, the historical of the millage rates and then the total. What also just residents and property owners should be cognizant is a little bit of the comments that I made regarding when a property does go from homestead to non-homesteaded, as well as when commercial properties are redeveloped. And that's where I think a little bit, hopefully, investors, property owners are aware that when you do redevelop your property into something, typically something that's going to generate more revenue or it's going to have more square footage, it's going to have a higher value. And so conversely, the higher value will translate into more in property taxes unless taxing authorities lower their millage rates, which are comments that I've received recently. Hey, I noticed that my tax bill declined last year. For homesteaded properties, it likely did decline, mainly because the total millage rate, the school district lowered part of their millage rate. So the total millage rate actually declined from 17.3818 to 17.1166. So again, if your property increased by 3%, that decline in the millage rate would have offset any increase in your valuation. And the valuation increase last year, we were at 12, I think it was a total of 12.5% last year. Again, once we receive that in May, then we will provide that to all of you. On the next slide is the taxable values of our property, the assessed values of property within Madeira Beach. And you can see the increases from year to year. And then essentially what the property tax revenue has been based on our millage rate, and certainly the percentage that has been collected every year. Unfortunately, not everybody pays their property tax, but we're pretty close to over 95% that has been collected, or 96%. So just to show you a little bit more detail. Also property, there is, I think all of you are aware, there is a discount on your property taxes if you do pay. Everybody receives their bills, usually come out at the end of August, September, or actually in September, because your bill receives a notice of your public hearing. And then if you pay before November 30th, there's a 4% discount. And every month the discount decreases by 1%. Property taxes are due March 31st or April 1st. And the next slide goes into a little bit of a discussion as to really looking for your input, commission input on our millage rate. As the slides have shown, we've had the same millage rate now for the past 3 fiscal years, 2020, 3 years, 21, 22, and the current year. And next year, the slide shows up on the screen what the revenue, what impacts may be using data for the current year. We still don't have next year. I should say valuation data for the current year that we will use for 2024. But I asked Andrew to utilize the current year valuations and what the changes in the millage rate would show. So at a millage rate of 2.25, which is a reduction of a $0.5 mil, we would, if that happened for the current year, we would have seen a $258,000 reduction in property tax revenue. If the millage rate had been reduced to 2.5 or 0.25, then we would have received an additional $187,920. The millage rate was left at the same 2.75, which resulted in a little over $630,000 in additional property tax revenue from the prior year. I know, Andrew, if you wanted to add any.
Yeah, I mean, just the second piece there is just if you're a property owner with a $700,000 property taxable value, had that millage rate been 2.5 mils instead of 2.75, then you would have had $175 break on your tax bill. Had the millage rate been 2.25, then it would have been $350. And so then that's in the far column on the right. The one in the middle is just on a per $50,000, what that would look like had we had a 2.5 mils or a 2.25 mils instead of the current millage rate. So that's just looking at it a kind of a per property owner.
And that's just the Madeira Beach portion of your property
Right.
tax. So
that-
just
Yeah,
the,
that's just on the 2.5, the comparison from 2.75 mils down to 2.5 to 2.25, not your full tax bill. The city portion.
so essentially at a 700,000 value of a property, if the millage rate had been by $500,000, you'd be looking at about a $30 per month less in property tax paid to the city. So it's, again, a $700,000, the full tax at that value, if it's at 2.25 mils, I believe is $1,575. But at the 2.25, excuse me, at the 2.75, it's 1,920. So again, a difference of $350 listed. And then the 175 for the 2.5.
Is there any,
I'm sorry, I mean, I just wanted to, I've had residents say, well, if we do lower it by that, I mean, I'd save I'd save a few $1,000s, right? Not exactly. It's not, because the millage rate is already fairly low with very high values. It's not a gigantic change in your property tax bill, but a reduction is a reduction. Sorry.
I was just gonna,
Vice Mayor.
my question was, but at the last statewide vote, it was voted down. But it didn't receive the 60% that it needed to pass when you improve the value of your property, when you mitigate to FEMA standards. Is there any news on that? Is that going to come back around? Because it was, do you know anything?
I don't think so.
Because
I don't think it's been much of a discussion at the current legislative session.
Because it was approved 57% people
Last time. right?
last time. But it didn't reach that 60% threshold, and I just didn't know if you had any knowledge if they're gonna try to reintroduce that bill or not.
Not yet, but I think I'm sure that'll come up probably next year again.
Are there specific benchmarks as a board that we should look for when making the decision regarding the millage rate? Obviously, residents are happier if we lower it, but it decreases our revenue, impacts our, what specific benchmarks should we be looking at when we make this decision? I see that it's, I mean, I realize it stayed the same for so long. Why would we change it? Is I guess what I'm asking.
No, I mean, I think one is really just comments and to show you what that would be. My recommendation will be to leave it as is. I mean, that, again, not my decision, but I think our recommendation would be based, and yes, of course, property values will increase again, but just, we do have quite a few projects looking to complete it, and we have received state funding to complete some of those, but we are looking at, other improvements that we've discussed in prior budget years that we're getting close to the construction beginning. And yes, we have dedicated funds for a parking garage, but
City revenue is a benchmark that we need to consider.
yes, I mean, that's really the kind of the main one. And then what are we doing and what are we looking to do? We do have millions in that have been approved to proceed. And again, the largest revenue source for that is the millage rate, but you can see that it's not a gigantic amount of revenue for one. But every year there are obviously increases. We do look to provide salary increases to staff. The benefits do increase from year to year, but every inflation is still high. But I mean, we're not the only one seeing that. Everybody who lives here and owns a business is experiencing the same thing. So the benchmark is really the revenue that we have, but due to the number of activities that we have started, we would like to see those completed. We're still be above our reserve, even if there was a change in the millage rate, even if there was a reduction, for example. We're certainly not advocating any increases to it. But again, we'll have much more data at the next one, but just wanted to get kind of, you know, feedback as to what your direction may be at this point.
So we have to consider projects, future projects, and basic city revenue for providing the services that we provide to the residents.
Yes.
Thank you.
Robin, aren't we also working on our comprehensive plan for the city that is going to show us long-term where we need money?
Yes, and then one other project that we will delve into that I've mentioned to each of you is essentially the city's kind of strategic plan, or I think we've been calling it the Diwali plan that was 20 years ago, that incorporates, you know, the city's mission and vision as well. And so we're gonna begin that process next month, and have multiple public meetings as to or charrettes, as some people like to call them, in terms of, you know, this is the city's vision, the mission. Here's the city's essentially master plan or strategic plan that's approximately 20 years old. The comprehensive plan kind of talks mainly, I mean, certainly all community development and economic development, redevelopment, but the city's master plan kind of encompasses everything, every one of your operations as well. But once we go through that exercise, that will likely tell us, you know, what is the city going to look like? What are we looking? What are our residents and certainly businesses looking into the future as to what our city may look like? What will be the needs into the future? Resiliency, do we need to, you know, raise the city, put more seawalls, you know, what will that look? Road projects, undergrounding, a lot of that. And yes, there are grants for that, but we haven't gone through that comprehensive exercise in some time. I mean, we have by updating the comprehensive plan, but those have been updates, not a complete, let's take a look at, well, what do we do as a city and what do we want to do 5, 10, 15, 20 years out? In other words, your master plan, what will our parks look like? What will the marina look like? All of that, we really need to take a comprehensive look that really hasn't happened, and last time was 20 years ago.
That's great news that you're looking at the Duani plan again, and it's going to start as early as next month. Going to start having
Well,
discussions.
the start will be myself and likely Ms. Rowan meeting with each one of you individually to get kind of a little bit more of your thoughts on it, but and certainly in Megan in my office to, you know, begin the process to explain kind of what it will be and get your thoughts as to what, you know, to include or not include, or that's the initial step. After that, then we will bring it back in a workshop and then schedule public meetings and it'll be multiple public meetings, not one, not two, but several meetings to just, again, capture. And you kind of go through the exercise of the strengths, weaknesses, opportunities, et cetera, and go from there. And then whether we hire a consultant or not to then continue the process. So that's where we're beginning next month.
That's exciting news, and I never want to lose an opportunity to talk about design standards, especially down at the Johns Pass Village. So hopefully that'll be quicker than just this review of the Duani plan. Thank you.
But that whole process also to Commissioner Brooks will be, the big part of that will be a financial outlook. What will be our revenue? You know, this is what we're looking to spend, but how will we generate the revenue? And it's really, what do we really need to do? And these are estimates of how much that will cost. And so will that help with the millage rate into the future? Likely. Where other cities, and some have been in the news in the area, well, you're going to need, you know, 90 million for this and 40 million for that. Well, we just don't have it now. Where do we get, you know, you start to look for grants, but ultimately kind of your millage rate is one of the first places. But I know that in my nearly 30 years in local government, that's typically not the most popular place to get revenue, you know, into the future. If we're going to need 50 or 100 million over the next decade, well, yeah, we'll get it all from the property tax. Well, that's typically not the strategy to take.
And your point to the grants, typically they're 50%.
There's matches, yeah, just about all of them. So any thoughts on, millage rate for the next year would be, again, my suggestion is, as I've stated, to keep the same millage rate, but we're open to how, what your thoughts would be going forward. And certainly we will, work that in. And again, not a gigantic difference from the changes, other than, again, we're not looking to increase the millage rate. Nor are we looking, I believe, any fee increases we did not have any fee increases. I'm looking at Megan actually specifically for, if there were any that not in sanitation or recycling. But now I can't think of.
For 2023 fee
Yeah,
increases?
for next budget year.
Next budget year? No, I don't believe so. We're just looking to add the 96 gallon cost.
Correct. And in addition, if we had a larger container, but that's actually not in the general fund, that would be in the sanitation fund. So we're not even looking really at any fee or as I'm aware right now, no other tax increases or any are proposed, such as the ones that are kind of beyond our control, the communications tax or franchise fees, those are set. There will be no increases on that. Really what we control are our, business tax receipts, our building permit fees, which we will, as our external auditors pointed out, we have a little bit too high of a balance, but we're definitely not going to raise that permit fee. So we're not looking at any other increases for next fiscal year.
And as I understand it, with the current millage rate, could be able to continue funding our projects and any short-term projects that we may have coming up and providing our services as we have.
Correct.
If you're looking for input, personally, I would like to maintain the 2.75. Just made and I know I'm missing a ton of projects, but the 95th Street property, the underground utilities back in the residential areas, park development, marina development, public works building, just the city park development. There's a lot of projects that we'd like to fund to increase our level of service. And I think the city owes that to the residents. And, we're looking at a very small amount of reduction if we were to reduce it. I'm not saying or increase it, but very small amount to reduce it. Of savings, I don't see the advantage of that. I would say maintain what we have. That's just my thoughts.
I agree. I think that when you think about, if anyone's even thinking about reducing our millage rate, it doesn't save very much money. And several years ago, we borrowed $15 million to do work in the city because we didn't have any money. And we haven't even paid that $15 million back. So to think that we should reduce our income when we still have debt, and you're in an economy that you don't know really where it's going to go, the election is coming. I think that for sure, we should not do anything for at least a year to see where we're going to be, to get our comprehensive plan, our master plan together, to understand our 20, 30-year outlook of where our money is going to go and what we're going to need.
I'll add my 2 cents if I may. I would like to at least see the numbers ran to where what would be the end result point if we lowered it by 0.25 or 0.50, just to see where they are, not to make a decision. Let's see what kind of position the city would be in with projects. Could we do it? Could we not do it? But just to keep it and not do an evaluation with the numbers, can it be done or not? I think that's what the residents would want. And then if it would not be feasible to lower it, we would have the data and the information to show them, hey, if we do lower it, we're not going to be able to do A, B, and C of which needs to be done.
Right. And that's part of the budget process next month when we bring the capital, that'll show these are all the projects. This is again, the estimated revenue. So that's in every year's budget, but we'll obviously highlight and focus on that at the next workshop. The last slide in your packet is, as I mentioned earlier, shows if the city approved in our budget to cover any costs related to dependent health coverage. This is showing essentially, and I know it's difficult to see up on the big screen, but what currently the costs are. And right now for dependent coverage, I believe we currently have 10 employees that are employees pay for their dependents 100%. So the city does not contribute any portion to any dependent care coverage. So this slide shows what that might look like if based on the current selections that the 10 employees have made. And we don't know whether the same 10 will have, request the same coverage for next year, but we're just for this exercise, we're just using that as a forecast for next year. Then at the bottom of the document, you can see the proposed costs that the city would contribute, the employer would contribute. If we contributed 25%, it's 30,000, and of course 50%, it's 61,000, all the way up to 100%. If we were to cover 100% of that dependent coverage, then the cost to the city would be just over 120,000. Keep in mind, we do not yet know what, if any, increases will be for next year for these benefits, nor again, whether, we may have other employees opt to change and add a dependent or spouse or dependent that they may not currently include for a variety of reasons. But most cities, and particularly I think our comparable cities, do provide anywhere from 40 to 60, as much as 60% or 2/3 of the cost of dependent coverage.
Question, how come this is coming up now? How come this wasn't dealt with years ago where we're taking care of our employees and our families?
I can only speak for last year when I was here my first year.
I
And
just can't believe that
it came up, but it came up kind of at the end of the budget session. And so it was decided to start when we're starting early this year to see if that to include. I can't tell you why it wasn't. Part of it. And so I think you all are aware, the city does provide their employees do not contribute to the retirement plan. And it's a 401k type plan. So nobody contributes to that. Only those that are an FRS, they contribute 3% of their salary. The other one is that, well, I think like most cities, we do provide a 100% health plan to the employees, but that's pretty standard throughout most cities. So I don't know if that's maybe the reason. Cities that have their own pension, typically the employees contribute anywhere from, again, as low as 3% to as much as 15%. But it's a pension type system. So prior cities that I've worked in, I had to contribute anywhere from 6 to 9% to the pension. And here we don't contribute, but not every employee has a pension. So I think perhaps in prior years, commissions just felt that wasn't a benefit to provide. And I know we've had, lots of commissions over the years and just different attitudes, different beliefs, different kind of, what they decide to provide to employees. And I think speaking for employees, we do receive very, very good benefits. I will say this is probably the one that the city was lacking in. It's just something that for whatever reason just wasn't provided.
Just for clarity, we contribute 100, or we make all the contributions to their retirement plan?
Yes,
They don't contribute anything.
correct,
Right. But we contribute nothing to any of their family health care.
correct.
Are there any comparative that show that any of our peer
We did,
cities,
and
how they do?
Yeah, and I get, most cities do contribute to, and I can forward that to you because that was in last year's, one of the last
Okay.
presentations that
I'd
we
love to
had.
see what the comparison is.
Because there, I mean, like I said, every city does contribute something to their, for dependent care.
I'd like to think that we're attracting the best possible employees by, offering this kind of a service to them. So I'd like to see what the comparison is so that we can just see where we are in relation to peer cities, other cities of our size.
Yeah, we'll bring that. And as we get closer, we'll bring what it might look like for next year. I mean, health insurance has increased. I think this year we had an 8% increase over the prior year. But typically they've, usually a double-digit increase in the benefit and just for healthcare alone.
So just for clarity, we provide or we pay into their retirement. Do other cities provide that as?
Some
a benefit?
do that but and especially cities that have a pension plan, typically employees contribute to that.
So
pension
if
plan.
we're going to look at other cities and how they contribute to the employee family, can we also
Sure.
know
For
whether or not,
retirement.
what else they're providing? Because I can only imagine that maybe in the past commissions might have thought that because we paid
That's-
pensions, we didn't
Retirement, yeah.
pay, and we pay the employees' health insurance and the pension, they chose that over paying.
Yeah.
Not saying that we shouldn't do both, but it would be good to see a comparison full circle of all of that.
Yeah, I'd love to see comparing apples to apples.
Absolutely.
You can't have the discussion about one item as an island. You have to look at their hourly wage comparison, retirement, the whole
Well,
package.
the whole. And which again, once we bring you the budget, that will all be.
Right, I mean, we want to
incorporated.
maintain and attract talent, of course. We want to support the staff, of course, but
And if you recall for this year's budget, because the two of you were here, we did make salary adjustments, particularly on the kind of the lower scale where we
Right, so
essentially our
that-
minimum salary is $15 because we were struggling. Sanitation, it's up to 18 an hour, 19 if you have a CDL. And so those were things that were added when we brought you the comparisons to show and how we were struggling, but we will definitely include that to show.
right, so if you're offering, I mean, everything's a balance. So you have to look at the overall package. That's the only point.
Hey, Robin, before we
sorry.
conclude, would you mind if we just spend a few minutes making the commission aware of the city's financial transparency site, just so they know where it is and they can
Yep.
view that themselves?
Go
And
ahead.
if you want to take I can narrate while you traverse.
So we've mentioned this before, the Clarion software.
If you just go,
Portal.
if you just go to the city's main website and we just go to departments. So essentially what this is doing is pulling data, summarized data from the city's ERP system into what we call just a transparency site that allows you to look at budget balances, actual balances by fund and by department for current year, prior year. It has a little overview on what the funds of the city are and a little description of them. And so that he went on the main website, then he went to finance and he clicked on that. So this is the overview tab. And so you can just, at the top there, I think is the list of funds. So you're right now. At the general fund. So there's a little narrative there of what the general fund is, what it does. So you could click on, let's say, the Archibald Fund. And it's important because the city budgets by fund, right? Each fund of the city is a self-balancing set of accounts. Assets minus liabilities equals equity, which for governments is net position or fund balance. And that's the budget we're going to present to you by fund and by department. So this helps you understand a little more of what the city's funds are. And then within them, if there's multiple departments by fund, and there is in the general fund has multiple departments, you can look into there. At the top is what's very important. There's an overview and then there's an inflows and outflows. So if we just want to look at inflows, if you go to the way top, Robin, above that picture, there's there you go, there's an inflows. And so you can look at inflows by type and look at the fund. And there it's going to kind of show you that. And so these are real time. This isn't just pulling every few weeks or months. So this is as transactions are entered and completed in the system, it updates real time for you on the website. So just to give you a little more information about both the city's funds, the departments, and then the accounts, both revenues and expenses by department, to help just give you a little better flavor of the city's finances, both from a budgetary and actual perspective. And there's even a tab that gives you kind of a budget versus actual overall with some graphical information and annualizes it. So there's a lot of navigating you can do and click around. So it's kind of fun. If you're a nerdy guy that likes numbers, or if you just want to learn more about, and it could, help prepare you for budget season, just to get a little better understanding of what the funds are of the city and what the underlying accounts are, and know the balances.
Now, will this give you a year-to-year comparison as of that date,
So
similar to what I was
So
asking?
to what you were asking, I just did look in the system. We have what's called the revenue and expenses report, where you select you can select one or multiple fiscal years, and then you can select a month. And then within that, you can ask, is it month only or cumulative? So we can pick like March cumulative and pull 2021, 2022, 2023, and give you all the summary of those balances from all transactions from the beginning of the year through the end of March for 2021, 2022, 2023. So I can pull that and then summarize it, and I can provide that to you all for the next budget workshop if that works for you.
Perfect. Perfect.
So I'll give you a little 3-year comparative, and we'll maybe by next workshop, we can go through maybe April, end of April for that.
Yeah,
March
because I
workshop.
mean, what I look for is, the outliers. Why?
Right.
If everything's relatively similar
Right.
every year.
And of course, some things could be timing where we had a big purchase on this in this month and in this year, but it didn't occur until later in the next year. Then of course, those
Yeah,
can kick out. But
especially with, the capital expenses and whatnot.
Right.
They can be broken out.
I'll give you the data and you can review it. And then any questions, I'll do my best to research and answer, but I'll at least give you that report for the next budget meeting.
Perfect. Thank you.
And of course, if you have any questions on this or want to meet one-on-one and go through anything, just feel free to reach out to me and be happy to meet with you. But the focus, as Robin mentioned, for the next budget workshop in May will be the capital budget, and we'll do it for over a 5-year period. According to our charter, the city is responsible for providing and presenting a multi-year, 5-year capital improvement plan within 90 days before the fiscal year. So that'd be July 1st. So we want to get a good start on this in our May workshop, talk through some things, and then maybe come back at the next workshop if there's anything you want tweaked. And it doesn't mean like by July 1st, it's done. We can't make any more changes. At least as required by charter, we need to present that information to you, get your feedback on or before that date. So we want to start in that May workshop and go through all that with you. But of course, the budget is always a live document up until the day that we adopt it. And then of course, after that, we've got to go through, if we want to make amendments, go through a formal resolution process. But that'll be the main focus on May. And of course, if we get more, I can provide that multi-year comparison through April. And then if we have preliminary tax numbers from the property appraiser, we can do a little more ad valorem analysis.
I've only been through this once and it takes many months.
We'll baby step it along the way. Yeah, just step by step. This is
Yeah.
just the basic intro and getting you loosened up. We're stretching before the big event right now.
Absolutely.
Happy to, any other, essentially that's our presentation to you, but certainly happy to answer any more.
Yeah, this is great
questions.
that everyone has access to that.
Yeah, it's on
Yeah.
the city's website, madeirabeachfl.gov.
Perfect.
I would just like to say about the millage rate, I do agree with the 2.75 if we can cover all of our projects and keep it strong like that.
Thank you.
Thanks. So, no other questions? We're finished on our end, Mr. Mayor.
I guess we can adjourn then. Okay.
Thank you.
Thank you all.